Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. If politics and geopolitics aren't complicated enough, yesterday's South Korean President Yoon Suk Yeol briefly imposed martial law, claiming that the National Assembly, which is essentially their parliament, was freezing the functions of the state via impeachments, legislative, and budgetary manipulation. The president ended up lifting the martial law less than a day after it was imposed. On the other side, the US JOLTS job openings showcased a higher number, and the dollar traded marginally stronger after this release. Good morning, JK. With the current set of moves in the dollar index and a strong data coming out, do you think markets have already priced a stronger NFP print as well?
Yeah, good morning, Swaraj. Actually, the last month of the year has been actually starting with a very large number of key events, and none of them is really, uh, you know, um, calming the market. Although moves in the market have not been large, and they have been somewhat muted because we have so many things happening, and market probably still assessing which side to take, and whether we should be selling more dollars, selling dollars or buying dollars, or whether the stock should be sold on a risk of bonds to be bought. I mean, we're seeing a confused market. That's why we are seeing all of them in a range, including the precious metals like gold and silver. They have been in a range. So, in fact, we began the week with the previous week's shock GDP slowdown in India. Rupee weakened to fresh low, yields fell, but stocks held up in India, and more voices of early rate cut by RBI have also grown, even as we head into another RBI policy announcement on Friday. Yes, yesterday again, rupee weakened further to 84.76, while the central bank, stepped in quite aggressively to push it down by nearly 10 paise on the stock, but the spot still closed at a new high of 84.69. Now, interestingly, in India, what is happening is also that the forward premium and options are seeing good movement. Option premiums have shot up, in a very steep manner in the last few weeks. But perhaps this is happened after the break of 84 and 84.20, and the stock market undergoing a steep correction as well, and the FII flows being consistent outflows. While this is not a very high level at 4% for 6-month option, it still shows that we are starting a very strong trend in the premium, and the market data also shows that the volume on the options have been increasing. The other sector in India that's showing movement is the premiums, forward premium of 1 year, which had hit a high of 201. I mean, 2.01 rupees for 1 year forward, has fallen to as low as 1 rupee 69 paisa yesterday. And this too was seen just 2 months back. And we are seeing this fall due to two reasons. One is after US yields going up once again towards 4.50 for the 10 year, and 1 year also going up, rate cuts being seeing a lesser expectation. And apart from that, another strong factor is RBI using the forward book to intervene. In the sense, they have been selling spot but neutralizing the spot impact by buy-sell swaps. That's bringing down the forward premium as well. So it is not fully reflective of the interest rate differential, but definitely it's putting a lot of pressure. So Indian markets have been definitely seeing a lot of volatility, although Indian stocks have not, have been quite calm in the recent sessions, and partially recovered some of the losses. In fact, what we have seen also is in the last 2-3 days, we are seeing FII flows have turned positive. That has not helped the rupee, but definitely at least the sentiment in the stock market is holding up. Now on to the global scenario where seems to be a surge in the negative news. As you have explained, the South Korea's chief declared martial law. Of course, he was forced to take it back up after the majority of the, in fact, the entire members of the parliament who were present voted against it, and so that it had to be retraced. But then, while it may not be in force, but it still indicates, uneasy atmosphere in the neighborhood in Asia that keeps the entire region somewhat on its toes. And South Korean won, of course, weakened to a new low of 1,424. Stock market fell by 2.5%, recovered by about 1% now. But as I said, the region is getting more and more, tense on such things. To add to that, the momentum that is building up in the trade war, because after US imposed restrictions on export of key AI components to China. China has retorted by restricting exports to US of some key components in making semiconductors. So that is also heating up quite a bit, and that is also keeping the markets on their tenterhooks. Chinese yuan, of course, has weakened to 6.32 almost yesterday, but now since recovered somewhat, the Asian currencies are seeing some pressure as well. In across the ocean, we have the French politics also taking turn for the worse in the last 2 days after the prime minister used his authority under Article 49.3 of the Constitution to pass a social security budget bill, which the opposition was not aligned with. But it appears that the opposition is going to move no confidence motion on Wednesday, with final results expected later in the night in Europe time. So all these things are, not really keeping the market calm, although moves so far have been very muted in the currency and even in the bond market. I would say even the stock market have taken all this with a sense of calmness, but perhaps this is the calmness that is going to be disturbed as we go along. I think we are also in the year-end period, which cannot be trusted to be calm. So I think a lot of volatility should emerge later, but at least for now, we are in an uneasy, calm atmosphere.
Thank you, JK. And yes, a lot of things are brewing in the market, starting, of course, with what's going on in South Korea, and that region is an indication of what's going on in the entire Asian side, because you have got South Korea where the politics is uneasy, and many other countries, even Bangladesh, and what's happening between China and Taiwan, which is keeping markets on the edge. And the trade war after the US imposed restrictions on key AI components, China has imposed restrictions on trade of several key commodities like gallium and germanium, which are used in semiconductors. So that's another thing which is going on. Even though the Chinese yuan has recovered from 7.3132 levels to around 7.28 levels. On the Indian front, rupee weakened to record lows yesterday towards 84.76, but the central bank pushed it lower, resulting in a 10 paisa appreciation from the lows. Option premiums have seen a spike after a break of 83, 30, 40 levels to 4%. It was around 2.5% in November. Forward premiums have also shrunk substantially. 1 year premium has fallen from above 2 rupees to around 1.69 rupees. So RBI's usage of forward book to intervene along with the rise in US yields has resulted in this fall. But the FII flows which have turned positive in the last 2-3 days are not helping the rupee yet. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.